So, real estate investment is the purchase and ownership or the sale of a property with the goal of generating income, appreciation, status, or all. It involves buying properties such as houses, apartments, commercial buildings, and land for the purpose of getting a return on your investment. For the purposes of this course, we'll just be talking about residential properties to keep things simple. Residential properties are the most common type of real estate and include houses, apartments, condominiums, townhouses, and co-op units. They can be rented out for short or long-term residential purposes, or they can be used as your primary residence. They're often classified as either single-family, that's single-family homes, multifamily, which are apartment buildings, and or mixed-use properties, which are apartment buildings with the retail on the bottom floor. So benefits of real estate investing are many, but here are the top 5 that I love. Number 1, cash flow. Rental properties can provide a steady monthly cash flow income through rental payments from your tenants, and this can serve as passive income for you, or less than passive if you're managing your own properties. Second, appreciation. Real estate offers the potential to appreciate in value over time, allowing you to profit from capital gains, which is why we're all here. Number 3 is tax advantages. So real estate investors can take advantage of tax deductions on mortgage interest, property taxes, insurance, depreciation, and more. But definitely chat with your accountant to make sure you're not, or you are gaining all the benefits and not trying to write off too much. Next, diversification. So real estate allows you to diversify your portfolio to reduce your overall risk and peace of mind. Last but not least, control. Unlike other investments, real estate provides investors with a high level of control over your assets. So it allows you to make strategic decisions, and you're the owner, so you get to decide what happens to the property. Before diving into real estate investing, it's essential to consider the following factors. Number 1, you want to focus on location. The location of the property plays a crucial role in determining its potential for appreciation and rental income. For those areas with high demand, good infrastructure, and good future development plans, you're going to win. If there's scary and not so great neighborhoods, not going to be as good of an investment. 2, you're going to focus on market conditions. So you want to analyze the market trends, supply and demand dynamics. What are the economic indicators? How many people are moving to the area? What is the potential for growth? And what's the potential for your profitability? Which is the important part. Next, we want to look at financing options. So we're going to talk about financing, understanding the different options like mortgages, loans, partnerships, joint ventures, and you need to know all of these things in order to make informed decisions. And last but not least, return on investment, why we're all here. So we want to calculate the potential return on investment by considering factors like rental income, property appreciation, expenses associated with property management, ongoing maintenance fees, and more. So how much are we putting in? How much are we getting out? Next, to find these great investment properties, you'll want to start by digging into the local market where you want to invest in. What's going on the ground? So to do this, you could reach out to local realtors or chat with fellow investors for the lowdown on recent property sales, what's going on as far as market rental rates, what are vacancy rates, and any other tidbits you can find out. By joining local real estate investing groups, you'll be able to find free information, and or there's some groups that do charge a fee, but if they're charging thousands and thousands, I would caution you against that just because you need your money so that you can save it to invest on things. And you can often find that information for free or a lot cheaper than what they are charging. Read a lot of investment books as well. They're only $20 typically, and they're a wealth of knowledge, so it'll save you a ton of money. Next, you'll want to evaluate the supply and demand of that local area. So to evaluate the rental demand in that market, look for indicators such as low vacancy rates, high rental rates, and growing population of renters. A strong rental demand can result in stable cash flow and long-term profitability for your investment property. Now you can find these rental rates on Craigslist, Zumper, PadMapper, Facebook Marketplace, and any other popular rental sites in your area, as well as chatting with other local investors to see what they're getting. If there are tons of vacant properties already, find out why. If there are too many properties on the market and not enough demand, that means that either there's low demand in that area, maybe the other investors are asking too much rent, maybe it's an undesirable area, maybe it's not safe. So key indicators are important. After rent, you'll want to check out the potential for property appreciation. Is that area growing? Is the job market growing? Are there infrastructure upgrades coming in? Are there new businesses opening? What's going on in that neighborhood? Is it going to be a good return on investment long term? And you can check out the demographic trends to identify target markets for your investments by looking at population trends, age demographics, income levels, and what else is going on in that area. By understanding the needs and preferences of the target demographic that you're going to be helping as your renters, it'll help you to decide on the type of property and location for your investment. And a lot of this information can be found on Stats Canada, talking to local investors and realtors, other mortgage brokers, etc. Next, you'll want to spot emerging neighborhoods. So you can look at the 10-year official community plan at City Hall to see what's being pre-planned. You can also ask local realtors and developers if any big developments are starting soon, or you can drive around the neighborhoods to see what kind of developments are starting. Are there lots of new projects, commercial developments, schools, large investment by municipal, provincial, or federal governments? If so, that could be your cue that this is a good choice for a neighborhood to invest in. You can also stay in the loop with the latest real estate trends by reading real estate reports, blogs, following news articles, and keeping an eye on the market analysis by your local economist on the news, in their local blog, etc. And typically just Googling what's going on in real estate in XYZ market is going to come up with a lot of Google searches for this. You're going to be listening for economic indicators such as GDP growth, interest rates, employment rates, and population growth. And as mentioned, realtors, fellow investors, mortgage brokers, Stats Canada, these can all be great sources for this info. Now, let's talk networking. And we've already mentioned this, but engaging with other professionals in the real estate industry like realtors, investors, mortgage brokers, developers can be a great way to provide you with valuable insights and opportunities that you may have not otherwise been privy to. Additionally, try to connect with and get advice from professionals who specialize in the market that you want to invest in. It's no good talking to a realtor who lives in the next province over or the next country over if you want to know about your local market. There are plenty of groups that you can join, local real estate networking groups, and ask as many questions as you can. There is so much to learn, but it is doable, and with a large barrier to entry, it means less people are going to be competing against you. By following these steps and strategies, you can effectively analyze the market trends and identify profitable opportunities in real estate in your local area. Remember to conduct thorough research, stay updated with market trends, and don't be afraid of asking fellow investors or realtors questions. With a solid understanding of market dynamics, you can make informed investment decisions and maximize your return on investment. Thanks for sticking with me. Don't forget to download your property analyzer below. And if you're curious about setting investment goals and crafting your financial strategy, you can check out that video in the link below as well. Thanks.